Friends, now we are going to see tips for trading zinc futures. So here we will be looking some other methods also, zinc bulletin, zinc ETF, CFDs, how we can trade, and there are various ways to trade zinc futures. In that we will be looking speculation, long position, short position, hedging and option trading. And we will be looking into contract specification of zinc futures. Then we will be looking into contract specification of zinc options. Then we will be looking what are the factors that are impacting zinc prices and what is the benefit of zinc mini contracts. Then we will be comparing between mini zinc futures and regular zinc futures. So let's look into how to trade zinc futures. So PE funds that invest in commodity like zinc include commodity pools and managed futures. So these are similar to mutual funds, and these funds can employ more advanced trading methods, ETFs, mutual fund, and these give large return. But here the problem is exchange managerial costs may increase. So are other ways also to have trade in zinc. The first is zinc bulletin. This is direct way to exchange zinc is through physical zinc bulletins, and here in bullion trade, zinc bullion on the other hand may necessity to use a safe storage facility, and here because of cost of storage and poor value to weight ratio, this can be not critical step. Zinc ETFs, so these are financial products like stocks, and these have been traded like shares, and there are many publicly traded corporations that are affected by zinc price fluctuations. So while investing in corporation might provide leverage strategy to expose ZER to zinc future price, CFDs, and we can speculate on the price of zinc using CFDs, and here the distinction between price of zinc at the time of purchase and current price is the value of CFD. So there are methods to trade zinc future. The first is speculation. Here trader buy or sell zinc futures in attempt to make profit from price movements. The second is long position. This involves buying zinc future contract with the expectation that the price will increase, and here trader do long to get the profit. Short position, this involves selling of zinc future contract with the expectation that the zinc price will decrease. So here trader take a sell position to make a profit when the price of zinc reduces. Hedging, so this involves zinc future to offset the risk of price movement in underlying physical position. So here a producer of zinc may sell zinc future to hedge against fall in the price of metal. So option trading, this also involves buying and selling contracts to give trader to write. Spread trading, this involves buying and selling two related future contracts simultaneously with the goal of profiting from the difference in their price movement. So friends, the price of zinc can subject to significant fluctuation, and future trading result in the substantial losses as well. So it is recommended trader to seek the advice of professional before entering in the zinc future trading. So let's look into the contract specification. So we know the contract size is 5 MT, quotation base, and expiry date always last day of the calendar, and initial margin 8% on the spawn, which is higher. So I am giving just idea about that. And let's look into zinc future contract. So you seen that it is already mentioned. So I am just giving you idea. So let's look into the benefit of zinc mini contracts. So if we are doing trading zinc mini contracts, so it is 1/5 size of the regular contract, and that's resulting in the lower margin requirement to have trade. So at current rates, zinc mini contracts are nearby 26,000. There is a flexibility also. A smaller contract allow us to customize our trading based on the risk management rules. Exiting the position, mini lots provide more options for profit booking because 50% of our position while continuing to hold to remaining 50%. So what are the factors that affecting zinc prices? The first is economic events. So zinc prices on the MCX are fixed on the rates in the international spot market, and this also correlated with the US dollar movement. So international economic events such as inflation, global industrial growth, and recession impact the zinc growth. There are some production related also factors. So nearly 55% of the zinc has been produced by China, Peru, Australia. So commissioning of new production facilities and an unexpected mine or plant closure due to natural disaster or accident or strike may increase zinc price in future. So let's look into what are the zinc mini contracts. So these are a smaller size future contract for zinc that are traded on the MCX, while the regular zinc future contracts have a light size of 5 tons and the mini contracts has the size of 1 ton. So these are a smaller contract and they provide more flexibility and accessibility to the trader while making them attractive trading proposition. So let's look into the difference between mini zinc futures and regular zinc futures. So mini zinc future contract size is 1 ton while regular zinc future contract size is 5 ton. Accessibility, mini zinc future is high, but while regular zinc future accessibility is low. Capital requirement less required, but here high requirement. And position and sizing risk management, mini zinc futures we can do more precise, but here this is not very much precise. So friends, this is from my end, just go through so you have a very good idea about to trading in zinc. Thank you.